KKR teaming up with Venado Oil. They're buying more assets in the Eagle Ford. So I talked to the head of KKR, their oil and gas division, last summer, I think it was, and he likes the Eagle Ford, not the Permian, because he wants production growth in a safe place.
Yeah, so I was going to, I mean, this is much more in your wheelhouse than ours, candidly. Sorry.
Totally. No, completely right.
So what does this mean? Because it does feel like KKR is being especially aggressive in the oil patch and specifically in this oil patch.
Yeah,
so I wondered what was behind it.
They basically want deals that are backed by cash flow, and they can hedge that cash flow over the next 5 years. And that's Eagle Ford and Permian, and not Permian. And they say that they want low cost. They say Permian's low cost, but not if you go buy it. So sure, it's low cost if you've owned the assets like Chevron for 1 million years, but it's not if you go in and buy it today. So that's why they're betting on Eagle Ford, which is also why you're going to keep shale production going, because the private equity people will keep buying them.
Well, that is one interesting thing that's underneath all this, right? Is that private equity money has been pretty consistent, really over the last decade or more, at really sort of fueling this shale boom. Right?
And now we wind up having ex-CEOs of oil companies creating basically a fund that is a blank check to buy stuff.
Right.
So and so that's a whole different world that's kind of private equity but kind of not at the same time, that's also buying assets. So then it makes that Saudi Aramco IPO a little tougher.
Yeah, and good luck to OPEC as they try to control this whole thing. When this is going on, you get KKR and private equity. That's a tough putt.